Hey everyone, this is Ben from Cheddar Flow, and we're back here for another video on the weekend. And basically, what we saw last week was a breakdown below my channel that I talked about in our previous weekly recap video. You can see here to start off this week on the 9th, we broke down below the blue line that I have here on SPX, so the S&P 500, and we stayed below until on Friday, we actually had a perfect retest of that line, literally to the tick of that line. We retested it and then fell back down. So this brings a very, very interesting and pivotal moment for this next weekly candle, which we go over here and click the weekly. This next weekly candle is going to be very interesting. If you're a bull, you're going to want to see us get above this weekly candle and hold it on whenever the weekly closes. If you are a bear, then you're going to want to see the inverse and see us close under it. So technically this week we did close under, not by very much. That's the first thing. And then two, this is actually a big hammer candle on the weekly. So a hammer candle is very bullish because we saw a major pickup with this long wick that you can see here. And that's a very bullish sign because that means lower prices were getting bought up towards the end of the week. And then we were able to close a lot higher, which shows a potential and good probability for continuation later in that week. Again, however, we did close below this line. So I'm interested to see, and what I actually expect to see is this week, we actually have maybe an up day or two to start off the week. So for example, Monday and Tuesday could be potential up days. Although I am nervous for Wednesday, Thursday, and Friday. And if you remember my danger window, I talked about May 11th to May 20th. And right now we are smack in the middle of this danger window. And this week is the most dangerous of them all for potential downside and accelerated selling. Does it have to happen? No, market is all about probability. However, my next danger window is all the way in the fall. I only had 3 for this year. So this is something that doesn't really happen very often, and it is occurring this week. I'm going to trade with exceptional caution. If I see good risk reward, I only will play for the downside in terms of swings. Otherwise, I'm just going to day trade. And I'm going to follow the flow to see what are they picking in terms of expirations along with premium. We saw on Friday a continuous hits on this 340 and 360 strike. This is concerning because these people that have been buying over 1 million worth of premium for literally the past month have been right every single time. So could they be wrong eventually? Of course they could be. However, their track record is basically 100% since the start of April at this point because they've been doing a ton of these big orders and seeing tremendous success with them. So I'm very cautious right now because we're seeing even further out the money puts. Also, it's very rare to see this far out the money puts on the market right now because volatility is so high. When volatility is high, they have to pay way more in premium just to be able to get these orders. Like, look at this 360. This is very far out of the money, but they're paying almost $9 just for a contract on this one because volatility is so high. If we go over to the VIX here, we can see we actually had a little bit of a breakdown on the VIX from this past week. However, look where it closed in terms of this trend line, right on top of the trend line that I have right here. So we're right on this trend line. It will act as a support, and I'm interested to see, again, the inverse here, because remember when the VIX goes up, typically the market goes down because you're going to see that fear. But what I'm interested to see here is if this support holds on this next week candle and if we see it hold above here. And that's going to be what I'm most interested in looking at. Next, I want to talk about tech. So this is QQQ. The NASDAQ has been characteristically more weak than the S&P 500 in this market. And we are seeing a lot of that similar weakness in terms of the flow from this past week. Again, a lot of these out the money prints, very far out the money in terms of this 250 print here, 285 we saw over here. With a bunch of continuous millions worth of premium following it. So you can see literally 77% put flow to the 23% put flow in terms of over $1 million in premium orders. So some very interesting prints that I'm seeing right here is this one right here, 6.1 million in premium for this 275. This is far out the money. Also, it is almost within the next month of expiration. We're seeing a lot of this 617 expiration getting hit. This is for OPEX for that June date. So that's why you're seeing a lot of this expiration. And a lot of these, another key point here, a lot of these are above the ask. And what that means is the people that are getting these contracts are very, very urgent in wanting to have that order executed because you can see right here, This one wasn't as far above the ask. This one's like 9.94 and some change, which technically is above the 9.94, which was the ask. However, we've seen a lot of SPY orders that are maybe 3, 4, or even 5 cents above that ask price. So that's very, very uncommon unless you see potential for a lot of accelerated downside and they want to get that order in, especially when you have big money, because the implied volatility will increase when you see these large orders hitting the tape. So they want to make sure they can get that order in right away. So some interesting prints definitely throughout here. We did see just one very bullish print, literally 1 to 2. We saw this 331 over here. This one is very bullish, 9.2 million in terms of that premium, but the expiration is a lot farther, and we're seeing a lot of these further expirations on SPY and the Qs for these bullish prints, with a lot of near term, like literally March to June, maybe July at the latest, in terms of bearishness. So maybe we see bearishness in the near term, with that midterm being potentially bullish for a bounce. We'll have to see. Also, one last thing that I want to note is we saw a lot of dark pool activity in tech, especially this week, even more so than SPY comparatively to their size. And what's interesting about that is we are at lows on the chart, so one could imply that this could be accumulation. However, we do have to make sure with dark pools, you can see here a lot of over 100 million in premium orders coming through the tape, 100 million here, 366 million. But we do have to take into consideration how the price action is comparing for the Q. So actually, I'll go to the QQQ chart here, and we have to play around with this price action. So if we're seeing a lot of prints in this range, let's say between 285 and 300, the longer we stay above that 300 range, that's going to be even more bullish, with an emphasis of continuation upward, because we saw a lot of that accumulation below. However, the inverse, if we stay below it and continue to chop within this range below and potentially even fall further, that's a very bearish sign, and those will most likely sell. So we have to look at the price action to determine how the trajectory of the stock price can go afterwards with this data. So definitely use this data as an edge. I like to mark it on my charts a lot. It gives me a good sense on where people may be accumulating or even distributing whatever their shares are or their positions. So I found this very useful. Also, this last thing here on Microsoft, one of the main tech holdings of the NASDAQ and S&P 500, we saw a very large print. I'll actually go to the historical flow tab, because I believe it was earlier in the week. We saw a very large dark pool print earlier in the week that was uncommon. It was over 1.1 billion in premium. It happened right here. So this was on 5/11. We had a 684 million in premium one, and then right after that we had the 456. So cumulatively, this is above 1.1 billion in premium. Very, very crucial level we're gonna have to look at. This is 260.55. So if you go to Microsoft's chart here, I would highly encourage you to put a line on that level. Because again, like I just shared with you earlier, if we stay above this level, that's a bullish emphasis on that stock. And look at this right here. Actually, we closed like right around that level. So it's very interesting to see. We're going to have to see how this goes between here. Also, this level up here was a crucial support and demand zone that we fell through. So I would not be opposed to potentially trading this thing for a retest. Very likely that this week we actually retest up here. Does it have to happen? No, it could keep falling down, honestly. But there's a good chance that we see a retest, and that's a really good short risk reward if we get up to here. So until then, it may chop around and stuff, but if it gets up to here, very good short risk reward. I potentially may short that, and we'll just have to see how it goes through this week. But very interesting stuff with this time and price meeting together. Do be careful, again, with this level. On the chart, we're going to see how this weekly closes, and also this is OPEX week, so be careful. We've seen a lot of heavy selling pressure in the past on OPEX week. That means option expiration, by the way. So we're just going to have to be careful this week, and hopefully clear skies ahead in the coming months, as we saw with that flow for some maybe long-term bullishness. But as of now, it seems to continuously be bearish, so err on the side of caution, and I'll see you guys later this week.